Welcome back to the channel, everyone. Today I want to talk about how APE just exposed the true number of AMC shares and just how manipulated AMC has been. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, you may remember back at the start of August, Adam Aron tweeted saying, to sum it up, the creation of APEs should help to clarify for you who is in our current shareholder base and how many company issued shares there really are. Now obviously if AMC was evenly distributed and there wasn't a single synthetic AMC share, the current shareholder makeup for APE should be the exact same as the AMC shareholder makeup. aka if AMC was owned 80% by retail investors and 20% by institutions, APE should also be owned 80% by retail investors and 20% by institutions. There shouldn't be a single share discrepancy in the overall flow or between the overall ownerships, as obviously APE was a one-to-one issue, so it should mirror AMC perfectly. But as Jan Jack tweeted, he said, Adam Aron and AMC Theatres, please can you help keep track of the float for APE and AMC, and what our brokers are reporting about them. Adam Aron said that APE should clarify for us exactly who is in our current shareholder base. But now another broker, not Webull this time, but Fidelity, is showing that retail owns 100% of APE. Not 95% of the float, not 90% of the float, but 100% of the APE float. But yet Fidelity is showing that somehow retail only holds 35% of AMC, not showing 80% or 90% or 95%, only 34.9%. Fidelity is showing that institutions hold 58% of AMC. It's showing that insiders are holding 6.2% and retail investors are only holding around 35%. Now instantly we know that sounds way off, as Adam Aron himself has confirmed that retail holds at least 80% if not 90% of the float when you take out the insider ownership. But Fidelity is also showing that retail investors hold 100% of the APE float and institutions and insiders and mutual funds don't hold a single share. Maybe that's because APE was improperly distributed and hasn't yet been issued to institutions and to mutual funds, or more likely it exposes the existence of a massive amount of synthetic shares. The ownership of APE should perfectly mirror the ownership of AMC, and the ownership of AMC should show that retail investors hold 80 or 90% of the float, and other separate data providers, aka Fidelity and Webull, should be showing the same data for both stocks, not completely separate data. Obviously, Webull on the flip side isn't showing that retail investors hold 35% of the AMC float, it's showing that retail is holding 71% of the AMC float. And obviously Webull is showing that retail investors hold 95% of the APE float and not 100% of the APE float. As I've briefly touched on in some of my previous videos, I think the number of AMC synthetic shares is so off the scale that all of these data providers, all of these brokers and all of these market makers don't really know what to report for APE or AMC anymore. These data providers are receiving so many different sources of data for AMC and for APE that they simply don't know what to present. Do they present 500 million shares in the float, or 5 billion, or 2 billion, or a billion? Do they present 85% or 95% of retail investors holding the float, or only 35%? Or 100%. They've got so many different sources of manipulated data that it's now got to the point where they don't even know what to show. And on top of this, you've also got different sources like Yahoo still reporting there's only 5.1 million shares of APE and not 516 million. They're also still reporting an incorrect or just a different market capitalization of $5.3 billion. This has been going for longer than 10 days now, and it's updated every single day, practically every single minute, and the data still hasn't changed. And I think a big part of this is a result of the manipulation caused by the BDRs or Brazilian Depository Receipts, which ABN AMRO have just been fined for. Robert tweeted saying since February of 2020, it was shown that ABN AMRO was restricted due to what I posted before, clear manipulation tactics with Citadel Securities Europe Limited, which had failed to deliver shares in ADRs from the beginning of February of 2020. So I'll explain exactly what ADRs and BDRs actually are in a minute, but I want to quickly touch on the fine that ABN AMRO have received and exactly what crimes they've just committed. So ABN AMRO Clearing Chicago has just been charged with improper handling of ADRs. It says the SEC today announced that ABN AMRO will pay more than $586,000 to settle charges of improper handling of pre-released American depository receipts. So ADRs are a US security that represent foreign shares of a foreign company, and in relation, BDRs are a Brazilian security that represent foreign shares of an American company, aka AMC, and these require a corresponding number of foreign shares to be held in custody at a depositary bank. aka those BDRs are Brazilian securities that require a corresponding number of AMC shares to be held in custody at a depositary bank. And the practice of pre-release allows ADRs or BDRs to be issued without the deposit of foreign shares or without the deposit of AMC shares, provided the broker receiving them has an agreement with a depositary bank and the receiving broker or its customers own a number of foreign shares or AMC shares that corresponds to the number of shares that ADRs represent. So that was a big jumble of words, but what that was basically saying is the practice of pre-release allows Brazilian AMC shares to be issued, aka to be bought and to be shorted without the deposit of actual AMC shares, provided the broker receiving these Brazilian AMC shares has an agreement with a depositary bank, basically stating the bank itself or the broker holds a number of real AMC shares that corresponds directly to the number of Brazilian BDRs issued. So this is basically saying that 100 million Brazilian AMC shares could be issued if a depositary bank or the underlying broker actually held 100 million real AMC shares. But as I said, we'll touch on that a little bit later. And the SEC has just found that ABN AMRO improperly borrowed pre-released ADRs from other brokers when it should have known those brokers did not even own the underlying foreign shares needed to support those ADRs. Basically saying that ABN AMRO improperly borrowed or improperly shorted ADRs and potentially Brazilian AMC shares when the underlying depositary bank didn't own a single AMC share. The order against ABN AMRO also finds that it failed reasonably to supervise its securities lending desk personnel concerning the borrowing of pre-released ADRs from these brokers. And interestingly, this is the SEC's 15th enforcement action against a bank or a broker arising from its investigation into abusive ADR pre-release practices. But trust me guys, this is where the story gets much juicier and where the story gets much deeper. Last year, a couple of Brazilian companies, Constantia Investimentos and Capitalo Investimentos, popped up holding tons and tons of AMC and GameStop put options. These Brazilian companies are likely shorting or holding put options against those BDRs for the specific AMC stock A2MC34. It's likely these two Brazilian companies were trying to hide their short positions inside put options and not even trying to hide these put options in AMC itself, but trying to hide these put options in the AMC BDRs. And it's likely these underlying shares that were shorted or the put options taken out against these underlying shares hadn't even been located before the BDRs were created. But as some further proof on that, Kareem tweeted saying BDRs require a bank to hold actual shares in custody in its own vault to grant the trading activity in each security. Obviously, the shares need to actually be held before these pre-released BDRs can really be issued and can really be traded. But as Kareem tweeted, the bank in charge of AMC BDRs is Citibank, and Citi holds 0 AMC shares. Citi, according to its financial statements, also has $199.5 billion of securities sold, not yet purchased. Now, Citadel, for example, only has $65 billion of securities sold, not yet purchased, but Citibank has $199 billion. And Citi also holds 0 AMC shares, but has somehow issued a whopping 3 billion BDRs for AMC stock. Now, these BDRs were issued in the ratio of 1:6, and therefore 3 billion Brazilian BDR AMC shares is the equivalent to 516 million AMC American shares. But obviously Citibank holds 0 American AMC shares and therefore realistically shouldn't have issued a single Brazilian BDR. But what that means is there's an additional 516 million AMC shares out there in Brazil that are being traded and shorted, and these shorted shares are being hidden in these put options, but there's not a single underlying American AMC share being held by this depositary bank. But as Dave Lauer tweeted, he said that below is a good thread on the reports of the Department of Justice short selling investigation continuing and expanding. He said, I have little doubt they found market abuse in smaller names and are now expanding their probe to see how widespread the issues are. What Dave Lauer is basically saying is the Department of Justice has found some short selling abuse, potentially amongst AMC stock, especially amongst these smaller hedge funds, and therefore they're expanding their investigation to investigate potentially Citibank and potentially Citadel as well. He says they've obviously found smaller hedge funds that are abusing short selling, and therefore they're now starting to look into larger hedge funds and potentially even market makers and major banks as well. Therefore, hopefully it's not long until the Department of Justice comes cracking down on these larger institutions and these larger market makers like Citadel, like JP Morgan Chase, and like Citibank as well. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.